Hi everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate reports so you don't have to. Today we are diving into something a bit different than usual. It's not exactly top secret, but let's just say it has more real estate than the board game Monopoly. We are checking out the Fidelity SAI Real Estate Fund Semi-Annual Shareholder Report. Think of it as a report card, but instead of grades we've got dollars and percentages. Ready to see how this fund is performing. This report covers the period from September of last year to the end of January of this year. It tells us how the Fidelity SAI Real Estate Fund has been doing. This fund is special because you can only buy it if you are a client of Fidelity's advisor or its buddies. It's not available for the general public, so let's pull back the curtain and see what's inside. First, let's talk about expenses because everyone wants to know how much it costs to play the game. This report estimates what your cost would have been if you had a $10,000 investment. For this fund, the report says it would have cost you $24. That's about 2.59% of your investment. Keep in mind, this is just for 6 months. The cost for the full year would be higher. Now let's look at some key facts about the fund. As of the end of January, the fund size was about $1.2 billion. That's a lot of houses in Monopoly money. The fund has investments in 43 different things that is called holdings. The portfolio turnover is 8%, meaning the fund didn't trade a whole lot. What did the fund invest in? Well, most of it is in real estate, obviously. The biggest chunk, about 31%, is in what they call specialized REITs, which are real estate investment trusts that focus on things like cell towers or data centers. Next up is residential REITs, around 17%, which means apartments and houses. Then we have industrial REITs like warehouses and retail REITs like shopping centers, each taking up about 16% of the fund's assets. Healthcare REITs like hospitals and nursing homes are about 11%. So it's a pretty diverse mix of real estate investments. Looking at the top holdings, the biggest investment is in Prologis, a company that owns warehouses. It represents almost 11% of the fund. Then there's American Tower, which owns cell towers at a little over 9%. Equinix, a data center company, comes in third at over 8%. After that, we have Welltower that owns healthcare properties, CBRE, which is a real estate management company, and others. The report includes a schedule of investments. This is a detailed list of all the fund's holdings as of the end of January. It shows how many shares the fund owns of each company and the total value of those shares. The vast majority, over 99%, is in common stocks. It also shows how much the fund has in money market funds, which are like super safe savings accounts for big investors. The fund also invests in something called Fidelity Central Funds. These are funds that are generally only available to other investment companies managed by Fidelity. It's like a fund within a fund. The report shows how much the fund bought and sold in these central funds over the year, as well as the income it received from them. The report breaks down the fund's investments by how easy it is to find their value. Level 1 assets are things with prices that are easy to find. Level 2 are things with prices that are a little harder to find. And level 3 are things where they have to guess the price based on their own information. Almost all of this fund's investments are level 1, meaning they're pretty easy to value. Now let's get to the numbers that really matter, assets and liabilities. The report shows that the fund had over $1.2 billion in assets and about $4 million in liabilities. That leaves us with about $1.2 billion in net assets. The report also shows how much money the fund made or lost from its investments. For this period, the fund had a net investment income of over $10 million. However, it also had a net loss from its investments of around $73 million. Altogether, the fund had a net decrease in assets of over $62 million. Looking at the big picture, the fund's net assets increased by over $1.2 billion during the period. This is largely due to investors buying more shares of the fund. The report also gives us some key numbers on a per share basis. At the beginning of the period, the net asset value per share was $10. By the end, it was down to $9.54. The total return for the period was negative 3.62%. The expense ratio is about 0.59%. Finally, the report shows the portfolio turnover rate, which tells you how often the fund is buying and selling investments. For this period, it was about 8%. So what's the big picture here? Well, this fund is all about real estate, but it's not exactly crushing it. It's got a diverse mix of investments in different types of properties, but it's facing the same challenges as the rest of the market. High interest rates, uncertainty about the economy, it all adds up. The fund has seen a decrease in its value, losing 3.62%, which isn't great, but also isn't the end of the world. It is worth remembering that a lot of the gains came from selling shares, and this isn't a reflection of the fund's gains as much as its popularity. This fund is a specialized play for those who are in Fidelity's inner circle. It could perform well in the long term, but you're betting on both the real estate market and Fidelity's ability to navigate it. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more insights into the world of corporate finance. Until next time, stay informed.